Hey everybody, it's Pete. Good morning. Welcome to a new episode of today's Best Stock Picks. It is Tuesday morning, March 23rd, 2021. First, we're going to start out with the market today, and then we're going to jump into the stock whose name nobody shall mention is GameStop. We're going to talk about trading GameStop earnings. We're going to talk about what it means to be buying a stock into or ahead of earnings, and especially this stock with everything that's happened in it over the last 3 to 4 months. So if you have a stock trading strategy, if you're in the stock market, it's pretty much impossible for you not to have heard about GameStop and the short squeeze that happened. So we're going to start out taking a look at that. Earnings are scheduled for after the market closes today. But we're going to start with looking at the market. We're going to start looking at the S&P, the SPY ETF, and the little clues underneath the hood that really one of our members this morning said that my alarm went off when I start to put the clues together. And this is really what separates somebody who's chart reading and really good at chart reading from somebody who actually makes money. I mentioned this last night in our weekly coaching call that our job is not to become the greatest chart readers on the planet. We don't want to be the best chart readers on the planet. We want to make money. There's a big difference. We want to pull money out of the stock market. We want to make the stock market make us money. And that happens when you have a trading strategy that includes money management and profit taking. Chart reading is probably like 25% of it. Excuse me, I get all hoarse after our Monday coaching calls. They're pretty intense. So we're going to talk about some of the clues that I'm noticing in the market. It's something that just really kind of don't like, and it's not necessarily making me change my opinion. The market's still long-term order flow bullish, but we're seeing a lot of breakouts fail. We're seeing a lot of really obvious trades not follow through. We're seeing moves in our favor for a day or two and then collapsing back down, and best case scenario, taking a flat on those winning trades, which I don't mind because we're not trading for pennies, we're trading for dollars. So if the worst case scenario, we're taking a flat, which means you get in and out at basically the same price, not that big of a deal. In the big picture, it's a blip. It doesn't matter. But you do need to start paying attention to these clues if you start to see failure and not follow through. And it's, even though you're okay with breaking even on a trade, moves in your favor, comes back, that's okay. That's good trade management. That's good money management. However, what that means in the big picture is that smart money and the deep pockets are not stepping up and pushing stuff through to new highs. We are going to take a look at some breakout plays today. We're going to take a look at some relatively strong plays. We have roughly 9 or 10 stocks we're going to look at today. We're going to specialize in technology and healthcare stocks today. So we're going to jump right in. Please do me a favor. If you like these videos, give us a thumbs up. That would mean the world to me, and it would let me know that this is the kind of stuff that you want to see. Also, click down and subscribe so you get updates. That would be really cool on your side, so you don't have to go searching for it, right? So we're going to head on over. We're going to take a look at the SPY. And what's interesting here is, again, it looks like everything is great. We pulled back for 3 or 4 days after last week's less than obvious week with the FOMC and quadruple witching on options. Now we have what we call a swing low, where we have a low and higher lows on each side. SPY also went well bid, which sounds like all signs are great. But again, remember what I said. Our job is not to be the greatest chart readers. Any chart reader on the planet, a 5-year-old could read that. What we want to do is start building an argument. We're start putting those clues together. And you drop down, and now you start looking at the volume. And you're noticing with the last week and a half, this is the 21-day average of prices, 20-day of the volume. Heavier days are bearish days, which are exceeding the volume, which happened last week. And we had a rally yesterday in the SPY ETF on significantly lighter volume. Now, if you happen to be newer to trading, that's not what we want to see. So again, it's not a change of trend. It's a potential change of trend. It's something interesting to pay attention to. These are those kind of things you like put it in your head and you'd be like, okay, that's interesting. Write that down. Again, I like to go old school. Everything for me is on a notepad so I can flip through it and take it with me. We're starting to see less than great arguments right now. And it's starting to manifest in swing trades that are kind of starting and stopping, which means that that's another thing you need to understand is when you start to see that kind of price action, you need to adjust your position sizing. You need to adjust how you're choosing to accept that risk. And we use the illustration in our swing trade program of assuming a 2% risk versus a 1% risk. So 2% of the allocated risk capital versus 1%. So that's kind of like the meter. 2% you're really liking and your conviction level's high. 1% means you're lowering your position sizing. Excuse me, again, sore throat after our weekly calls. So obviously this stuff is for educational purposes. You can make your own decisions. But if you want to learn more about this stuff, we actually do have a new, we're introducing a new swing trading service this week, actually. There's a lot of members of our community here that like to swing trade and be active in the markets, but have a full-time job. So if you want to get access to everything that I do during the day, leave me a comment below about the swing trade tracker, and we'll make sure that you get that information. We'll reply to your post. So those are the clues. That's what separates somebody who's chart reading from tape reading. It's adding those things up, and something just doesn't smell right. We're still pointing up. Everything's still moving in that direction. I'm still buying. We're going to go over some ideas right now. We're still looking to be long. It's just not, that conviction level is just not on the high side right now. And what's interesting is usually when you're in a potential change of trend, you don't really know it's a change of trend until it reverses. And right now we're kind of like doing this dance back and forth. Technology has been strong the last 4 or 5 days. We've had some explosions to the upside, Facebook being one of them, and a few other ones we're going to take a look at today. Microsoft, Apple even found some buying yesterday. So those stocks were strong and rallying while the market's not giving us perfect signs. So the rotation, it's making your head spin. Seems like from one day to the next, it's like that sector's leading, then that sector's leading, and that sector's leading, which makes it very hard to have conviction from one day to the next and really get in there and be like, I'm gonna trade this stock aggressively for the next 2 weeks, the next month, and really dig in until I see a change. Right now, we're seeing that change happen almost on a daily basis, and it's making your head spin. So I also want to say, if you're having that same experience, and what we would call these market stocks, the popular stocks, the stocks that usually lead the market, take a step back, breathe. It's a part of the normal cycle of it happens. There's peaks and troughs when it's easier to trade. We're in that little bit of a lull right now, so be smart with your risk management. Okay, so we're going to head over. We took a look at the market and we took a look at the SPY. So now what we're going to do is we're going to jump into GameStop. So GameStop is earnings scheduled after the close today. So here's the big point that I want to get across. GameStop and any stock that you buy, you're not buying what the stock just did. You're buying what the stock could be doing going forward. So earnings report coming out after. Now, the one big thing that I want to talk about here that's pretty interesting is they get into talking about foot traffic. They get into talking about new management team in place. All of that is amazing. But keep in mind, you're buying the future earnings for this company at the PE where it is now. So options premium are exploded. So it's going to be very challenging to make money on options because of the increase in the premium price. Not the difference between increased premium versus you can afford it. That's not the same thing. Then you have time to expiration. What's going to happen with this stock right now? I'm not looking to buy the stock right now. I want to make that clear. Again, everybody can make their own decisions. I'm not looking to buy the stock right now. If the stock happens to pop, fine. I don't feel like there's an edge right now at the price it's at and the fundamental differences in what has happened behind the scenes, and you throw in the short squeeze. I can't imagine the stock is going to explode to the upside to justify putting on a position. And we'll see how it trades after hours. I'm not going to be involved in this on the long side. I'm obviously not shorting the stock. However, my strategy, the way I'm normally looking at these trades, is I'm waiting for the stock to tip its hand, and then I'm going to hop on board. If it happens to rally, fine. I'll find a spot after the fact, but I'm not going to. Here's the point that I want to get across. Can you look at this and say with absolute conviction you think you have a good idea of what's going to happen next with all of the other stuff that's going on in the stock right now? I think it's very challenging to have that opinion. I think it's very challenging to have that bias right now. Maybe you can, maybe you can't. I'm telling you as your friend, ask yourself if you're going to trade this stock into earnings and hold it through earnings. Do you have absolute conviction in your idea, or are you just hoping it's going to end up moving in your favor? Really think that through before you decide to hold this stock through earnings. One other thing that I do have a question about, and I'm going to give some context to what I just said. I have a general rule about holding stocks into earnings because most of my trades are in that 3 to 15 day window or hitting my 20% profit target. Within that window, if I have a 10% profit on a trade prior to earnings, I'll hold it. And I'm essentially looking for my strategies. If it pulls back, fine. I have a cushion. But if it moves in my favor, I'm going to have a home run. So it's either really, I'm almost going to break even on the trade if it trades against me on earnings because I have that cushion. And if it moves in my favor, then it becomes a home run. And I'm looking for that next big leg up in that stock. So I don't have a position at GME right now. I'm just giving you some wisdom of, do you feel like you have absolute conviction in your idea to hold this stock that has so many different factors in it right now through the earnings after the close today? I think it will be a much easier trade after the earnings come out today, and that's when I'm going to jump on board. So I just wanted to talk about the different scenarios, all the stuff that's going in there. There's so many factors in the stock right now, but the biggest thing to keep in mind right now is you're not buying what happened. You're buying what they anticipate happening going forward, which is the guidance, and that's the big number that we all need to pay attention to after the close today. Okay. So as we said, we're going to take a look at technology stocks and healthcare stocks. We're also going to take a look at we'll go to the other stocks first. We're going to take first look at EXPE, one of my favorite strategies. When a strong stock pulls back, closes on the lows, and you can actually see here it's actually pulling back perfectly to the, again, simple trend line. We don't need to be, I'm not even showing it to you. The simple trend line here where it pulls back and holds. This is one of my favorite strategies. It closes on the lows, holds that trend line, finds support at yesterday's low and at that trend line. Then we look for buyers. LOW actually pulled up in yesterday's game plan meeting. So hopefully you took advantage of that and actually finally broke through that level. Next we have BBY. Again, not the greatest trade today, but as we talk about now, it's reached that saturation point where we're expecting profit taking or a pause. So what you need to do now is have an alert set for 121, 122 in that area, looking for a 2-day pause up there and then looking for the next punch through. So again, some trades are today, some trades are this week. Next, we have Wayfair, which we actually called out yesterday as well. Actually had a earlier entry as a day trade that kind of melted back down, but ended up closing near the highs again. So I like this breakout in Wayfair today. So getting over into some of the technology stocks that we're watching today, APPS, Digital Turbine. Oh, let me see if I can type that in. Actually really good, clean breakout level at 96. So again, you have to have that alert set at 96 as well. Intel has been relatively strong where it's actually holding up. Didn't really pull back that much, and now it's at a breakout level again. And Texas Instruments, again, also at a breakout level. So you see there's when you see a preponderance of the same industry groups starting to do the same thing, which is entering near breakout levels, it's something that you want to pay attention to. Facebook, we mentioned a couple of days ago, had this really good, clean, bullish run. Even Apple stock found some buyers yesterday, which was interesting. So the tech stocks across the board. Home Depot had a good day yesterday. And again, very similar to some of these stocks, just like Lowe's, pushed up to that rally point. And now we're looking for a pause here before the next move. 2 healthcare stocks we'll be looking at today. One is a stock that has actually shown some really good relative strength and what we call smart money well bid. Now, remember, we talk about the daily charts and follow through, but what we're really looking for is weekly follow through. And you can see now there's no order flow here, but we're starting to see the signs of the smart money from one week to the next, paying higher prices and holding higher lows. So we need to get up to this 260 area. But again, this is one that needs to be in your list. Another setup that we're noticing a lot during this week is longer term bearish order flow for the last 5 to 8 weeks being broken. So we're seeing this now in EDIT, where this downtrend since the beginning of the year is now broken. Here is actually where it broke. And now the breakout over 50 is where it would matter. So then we're looking at a trade from 50 to 68. So right now, this is a potential change of trend where it broke the trend here, and a trade above 50 triggers a new long. So there's a lot to look at today. Just keep in mind what I showed you about the SPY volume. That's speaking volumes right now, no pun intended. So it's kind of made me pull back a little bit on my position sizing and working my orders a little bit more than going with full share size on the initial entry, which is just smart trading because we're not seeing that clean follow through, and the rotation is just from day to day. So whatever your stock trading strategy is, make sure you're sticking to it like a monk right now. You have to be super disciplined. This is not a time to go find stocks that just happen to be blipping, because it's hard to have confidence in the stocks right now, unless you're really watching them every day and they are seeing some follow through. So we're in a little bit of a shorter time frame mode right now. And a lot of members of the community are asking, should I be dropping down and going to those shorter time frames? There's a time for cash flow and there's a time for holding those trades longer. I'm sticking to my strategy, which is I'm okay with taking a flat or getting out at break even in exchange for those 1 or 2 trades that follow through. But I can definitely feel the angst. There's no question about that. When you keep taking good trades that come back, it starts to get a little frustrating. But again, think long term. That's the big thing. If you're making the stock market make you money, it's a long-term process. It's a fun process. But you need to remember there's going to be peaks and valleys. And if you feel like you're in a little bit of a rut, just lower your position sizing a little bit, and that'll help you get back on track. So have a great day, everybody. Subscribe to the channel. Give us a thumbs up. Leave a message down below if you want to learn about the swing trade tracker. We'll make sure that you get the link to that too. So have a great day, everybody. Take care now.